Hi guys, this is Alan from Let's Say Financial. How are you today? For today, I'm just gonna show you how to hedge in buy option trading. So a hedging is a common technique for forex trader to minimize losses, and it can be used in buy option trading as well. And then for today, I'm just gonna show you how can we hedge in buy option trading. The strategy that I'm gonna use today is the Bollinger Bands and MACD. And then while I use this strategy, I will be using the technique of hedging. We'll take a look at how do we use it. First, let me set up the technical indicators. Okay, go to technical indicator. Yeah, just that button right there, and then we'll put a tick on Bollinger Bands, and then open the drop down for Bollinger Bands. Yeah, open the drop down, and then now we deselect the lines on the left, and then we keep the one on the right. So that's it. That's all done for Bollinger Bands. So next we'll go to oscillator. Yeah, oscillator, and then put a tick on MACD. Put a tick there, and then open the drop down for MACD. So the parameter we are using is 5, 35, and 5. So again, EMA 1 is 5, EMA 2 is 35, signal is 5. So after we get this parameter down, then we can close the technical indicators window. So so the last thing for today, I'm using a 1 minute chart to trade with a 3 minutes option. So the reason for this is because for hedging we do actually need a slightly longer option period to trade. So that's all set, and we will take a look at the price here, and then I will place a trade first, and then I will show you how I place this trade. First I will browse a bit on the currency pairs, and then I will see which currency pair is suitable for the strategy. Now in here we are looking at a range market, so that is suitable for this Bollinger Band and MACD because it's a range market trading strategy. I'll place a trade first, and then I will explain it to you how I place the trade. I place a trade now. Now again, the strategy is a range market trading strategy. So first I need to confirm the price is in a range market now. So how do I do that? So I just put in 2 lines in the chart, and then now I see that the price is moving within this particular range, this box. So I can say that the market is in a range market. So next I look at the candlestick, so it touches with the upper band of the Bollinger Bands, and then I move on to the MACD, and then the 2 lines cross over and it gives me a purple histogram. So that's why I opened that trade there, because I get a double bearish indication. Next I will talk about hedging a little bit. Hedging is a technique for you to open 2 positions that is against each other. That just to keep in mind that hedging is not for you to maximize your profit, it's to minimize your loss. In here you see now the position is going against me. So now I don't feel confident that this trade is gonna be end smoothly. So now what I'm gonna do is that I will try to place another option that is against my first option. I will place another option here. Just wait for a little bit more. So I actually need a particular distance, a certain distance here. So you see I placed a high here. So just because just now I think that the trade might go above my entry point, and then I might lose that first option. So in order to minimize a loss, I need to place another trade, and then I place another trade that is against my option. So my first option, which is a high option. So even though if I lose my first trade there, So that is a $100 loss. So if I make my profit with the second trade, then I get 175 back. So if we do a simple calculation, the loss of these two trades is only gonna be $25. So that is a lot less than a the original loss, which is $100. So again, hedging is for you to minimize your loss. It's not for you to maximize your profit. So you only use hedging when you don't feel confident of your first trade. So then you place a second trade, then that is against your first trade. Okay, so the first trade here was ended in profit actually, and now the second trade, the price is actually moving towards to my second trade's direction. So well, if I make these two trades both in profit, so I will be making $150 profit. So that's another benefit of hedging. So that is chance for you to end both trades in profit if they end in the area that is overlapped. So okay, so now the second trade is end in profit as well. So yep, okay, so well, we'll take a look at the history. Okay, so yep, go to trade history. So yep, there's two trades there. So and both of them were ending in profit. So that was unexpected because the purpose for me to hedge is to minimize the loss of the first trade. So but then well, that's good. So both of them were ended in profit. So again, just one more thing for you to keep in mind is that when you hedge, I would suggest you to use a longer period of time frame. So 3 minutes option period is a minimum. So try not to hedge in 30 seconds option or 1 minute option because the price is too volatile and then the option is too short. So you do actually need a longer period of time to use the technique of hedging. So just keep that in mind, and then well, just give it a few try, and then I think you should get a hand on how to hedge in binary option. Or if you do have any question on how to hedge or any other question in regards to hedging, you can just feel free to put a comment down there, and then I can get back to you with an answer. So well, that's pretty much for today, and thank you for watching. If you do have any question, put a comment down there, and well, don't forget to give me a like if you like my video, and subscribe to my channel for more live trading video. And I will see you soon again tomorrow. Bye.